Actually, it's 12:55 in Chicago on Monday, um, November 28th. I wanted to show a great schematic that is live. That's ongoing now. That I just labeled for the live member chat room today, and I want to explain it to you versus just sending this chart out to you. It's really a beautiful chart. The Wyckoff schematic works. Wyckoff schematic works. And in this particular case, let's go through this. Markets in a clear downtrend, clear negative background. We need some type of change of character, change of behavior in the market. We start to see volume start to increase. Volume starts to increase is because all the longs are liquidating their positions. Any longs that are long are just puking out, throwing in the towel. They do it several times, but as the market goes lower, it uncovers the last longs in the market, the oldest longs in the market. You start to see very high volume, indicating the last long throw. Get me out, indicated by a large volume. We have shortening of the downward thrust. The market does not make much downside progress to the market. This leads to the short covering by the CM. He covers on the way down. Heavy volume by fund and spec selling leads to the CM covering his short positions for the way down. This creates preliminary support because he's covering his shorts and support. We know they're looking for the secondary test in this Wyckoff schematic. We have the market then goes to the selling climax. All this is the selling climax. This indicates by the largest volume, usually the largest range, but we don't get perfect world all the time. The close is very important. This is the selling climax of the market, which leads to the automatic rally, which is to the top of the resistance level. Remember, high volume bars get tested. High volume bar gets tested. A perfect retest here. Don't worry about the closes. If we talk about all the time, we then get the secondary test. In Wyckoff schematic, they will show you that the market will go underneath the selling climax as a secondary test. Okay? The better ones, to me, are the ones that don't do that, simply because the market is stronger this way. I don't look for a spring of a selling climax often. It doesn't happen as often as not. So I don't look for it, but I look for ending action. Market holds up here. If you take your line and draw it across from here, it has higher volume, second highest volume. We draw that across. It forms some type of spring, but still in the position to do nothing. Here is your sign of strength. High volume, large range. It could happen within the trend range and in the trend range and outside the range, or completely outside the range. In this case, in the trend range, outside the range, the shortening of the downward thrust. Now, this is high volume, indicating any selling was being absorbed by the buyers. Market goes up as another retest. Boom. We now have a situation where we can test back into the LPS area, or we can have more markup to the market. This would be your LPS area. That's it. And this now measures to a point. So we take this here. I'd like to take this. It's the eyeball test. This is how we do it without doing the point figure chart initially. You ride that wave, 115.30 area. These are charts that are gold. These charts are fantastic in nature. It's a great Wyckoff schematic. We don't get nice Wyckoff schematic that often, and like this. But we get Wyckoff schematic, and it shows up. It's a daily chart. This may have to come have a retest. Volume is too high. We have to go retest back down the air before marking up. So that was a chart that I want to show you in class. Today is Monday. Okay. Thank you.